Hey guys, welcome to another video brought to you by Total Control Traders. There are so many congratulations to go around today. They will be announced throughout the video, and it makes me so happy. Nothing but excitement to see the success in our trading community. Congratulations all those of you who are seeing new highs in your accounts, who are seeing profits. And it's okay if you aren't, because your trade is just around the corner. Be persistent. Look for that right setup. Don't let the FOMO get to you. It will come. Also, very happy to announce of our joining of new TCT admin member, Wing. One of my personal technical analysis mentors, and also one of my close friends. He is very experienced in technical analysis, as some of you have already witnessed. He's already began sharing his thoughts, his thought process, his chart analysis upon the first day of joining. So thank you for accepting the invitation, and glad to have you, Wing. Our team can only grow stronger from here. So I hope that you guys who are watching the video check out our website at totalcontroltraders.com. There are memberships. There are still trial memberships left remaining. However, there are limited quantities for it. Make sure you check it out. And happy to have our first trial member become a real subscription member. Thank you, John. All right, let's get right into it. First chart, SPX. We are making new all-time highs again. Now, where is this going to take us? All right, let's take a look at the shorter term. The last low, the higher low of the overall daily chart, to the higher high that we ejected from. All right, sorry about that. Dog was barking non-stop, so I had to pause the video. Anyways, going from the last low to the high where we ejected from, the 1-to-1 extension from back here on this low to the high, to the higher low. So we ejected from here. Now we have straight blasted through it from the bounce of GP. Next target we're looking at, short-term wise, similar idea, from low to the high to the higher low of the pullback. We're looking up at the target that's coming up, 3927.7. So based on the decreasing bull volume and the continuous bear divergence on the daily, I am expecting a stall, ideally not a complete rejection at that zone. And reasons are very clear. First, we are a little bit extended from the daily 8, especially considering this is indexed SPX. Generally, we don't get too far extended as we see on individual tickers. Second, decreasing bull volume. Third, bear divergences. Now, we could very well see a pullback such as we saw last time from the bear divergence of here to here. And that's the pullback that resulted from the bear divergence. However, from here, ideally, I don't want to see that kind of pullback. The bear divergence is not as strong either, as we can see from the RSI. So the rest of the week is going to determine where the higher lows are. But if we were to zoom in on the 4-hour, there has been nothing but healthy higher lows. On the SPX 4 hours, since the bounce from the GP, we made a bull flag 4-hour bull flag, broke under the 4-hour 8 very slightly, well, on one candle. We held the support zone. From there, we broke bull. Now, today, we saw sideways action, and we held the 4-hour 8 again. And at the end of the day, the last 30 minutes, I believe it was, $130. Okay, yeah, it's I forgot what time it was, but this was the last candle of the open market. During the last 30 minutes of the day, we saw crazy bull follow through from this 4-hour bull flag. So we are still looking up. Remember, it is February. What that means is crazy bull market. RSP seasons, a lot of cash, especially after the pandemic that we have witnessed. People have nothing but cash in their account, in their savings accounts, in their investment accounts, anticipating for us to see nothing but bull action from here into end of February. We are forming a slight bear divergence on the 4-hour right now, but not going to be worrying about the aftermarket. Let's see what tomorrow brings us. All right, next, NAS. I realized last week that I ended up doing market deep dive on every single ticker as opposed to just the weekend ticker. So I'm gonna go back to our regular basis to try to do market deep dive on weekend only, as SPX will still remain the main watch. Now on NAS, we are coming up to that 1-to-1 extension that we never reached from those same extension targets, which would then line up with SPX 1-to-1 extension target. Just ever so slightly right under it. 13,756 is the target that we're looking at. Dow's, ABC. Let's draw a fib, see where that leads us. Nope, wrong fib. It's going to be from this higher low to this higher high to this lower low. Okay, so the Dow fib extension targets don't really work out as well. The next target we're looking at on Dow is 33,566. And judging by this last pullback on Dow, it does not seem to respect the fibs that well. However, use SPX and NAS as your main guide. If we were to reject, look for a back test of either this upper trend line in confluence with the previous high, or if we're to lose that, we'll be looking at this key previous support resistance zone of 30701.7. All right, next, Bitcoin. Congrats, Bitcoin bulls. My goodness, look at this bull volume. Look at the follow through. Weekly bull flag. We have never lost our weekly 8. Bounce right underneath the weekly 8. Bounce again right underneath the weekly 8 on a daily bull divergence. We can see price action going up. RSIs. Hard to see. Slight downward pressure. So daily bull flag or daily bull divergence on the GP. There was no reason for you to not enter this trade whatsoever. If you're trading, especially if you're trading straight Bitcoin. If you're trading ETFs, that's a little bit different, as they're other opponents versus just Bitcoin. Then from there, we went straight up to previous support rejection zone, closed right on it. Next day, opened the same spot and got shot up. Then from here, on this Tesla buying or Elon Musk buying billions worth, I believe is 1.5 billion worth of Bitcoin, volume is now coming in. Now, as of now, we are seeing a slight shooting star candlestick, but based off of the volume as well as price action from yesterday, I am anticipating this to be quickly reversed into tomorrow's open. Looking for that follow through, we'll be looking at higher prices. First target, 1-to-1 extension, we're looking at 54,582. And this is an extension target from the previous higher low to the higher high to the higher low at the GP. Makes complete sense for us to go 54,582. Even. All right, that's it for the market. Next, hottest tickers. First one, Tesla. Not gonna change. Tesla is gonna remain on top watch. And this is not Tesla. All right, Tesla seeing a rejection from the upper trend line. So we bounced from this lower trend line, bounced again, rejection, multiple rejections, came down, and today at 12 o'clock noon, we were right on that trend line. And as I was as I was chatting with our new admin member, Wing, he saw this same trend line, and from there it was right as this candle was starting, we started seeing a bounce. And as of end of day, we closed above the 30-minute 8. So this chart is interesting because of how it's set up. Essentially, this is the weekly trend line. The must hold, the weekly trend line from all the way back here. We have never lost it. Then on the daily, there is, okay, maybe not daily, 4 hours, there is a wedge that was starting to form. However, on the even shorter time frame, on the 30, there's a wedge within the wedge that we already have now 4 touches on this bottom trend line. If you're in bull for short term wise, we're gonna want to see that follow through tomorrow. If we reject from this upper trend line, which seems fairly strong as a resistance, we will be looking at further downside. From here, it is either a breakout to meet that new all-time high resistance at just under 900, or we will be looking at a rejection back to this key support zone around 333. Now, depending on the pace that we eject for or from, it could be 2 options. Either a quick rejection down to the 0.5 just below this previous key support, then the bounce up, or let me redraw that. So rejection to just below, bounce up kind of thing, or we're going to see a rejection, a slower rejection to right here, and now that is, okay, I'm not drawing this properly. So 3 possible scenarios: straight shot up, rejection to the 0.5, lining up with lower trend line of the wedge, back up to the trend line. This will be the weaker bounce. A stronger bounce would be rejection, come down to this confluence key support with lower trend line, then we're going to want to see the volume come in for that bounce. This will be a stronger bounce. Okay. Overall, Tesla is still looking strong. Tomorrow, however, is definitely key. Apex does not go past tomorrow. We're gonna want to see a we're going to see a break before noon tomorrow, Mountain Standard Time. All right, next, Amazon. Disappointment after disappointment. Amazon, we saw that bounce from the GP again. However, yesterday, Friday, not as strong of a close. Today, slow grind down. Daily volume, not very noticeable. We did close above the 88. So from here, still in the trade, gonna want to see potentially an hourly wedge forming. It could already be forming. Generally, they're not the short though. So we could very well be seeing a higher high followed by a higher low to form a bigger wedge. Keep your eyes on it. Am in the longer data call. Not going to be worrying about this. When Amazon goes, we know it's going to go. And this is going to be precedented by NVIDIA. Likely to be precedented by NVIDIA. Look at the weekly chart. Sideways action since July 6th. When this goes, it is going to be an amazing move, guys. Keep your eyes on Amazon. Do not lose sight of it. Next one, NVIDIA. We are seeing that breakout today. Similar idea since August 24th. So not as long as of a sideways action. But on the weekly, it is still a sideways action. Sideways long-term wedge, depending on how you draw it. So this wedge, we played this, it faked us out. Then now there's a new wedge that we finally broke bull. A complete sign of breaking bull on bull volume. Earnings is coming up February 24th, sometimes away. So we'll not be worrying about it. I want to see that follow through on volume tomorrow. This is the first pop of volume since we have seen in a long time, aside from the breakout, fake out. So want to see that follow through for me to have confirmation. I want that confirmation first thing tomorrow. There's been too many breakout fake outs lately. If this were to reject, gap up and reject from the 590 zone, I will be out. If this were to even gap up to the 590 zone, I will be out too. 88 is far below. We gap up to the 590, we will be extended from the 88, but pay attention to that first 5 to 15 minutes volume. I want to see that volume in that first 5 to 15 minutes. Next, workhorse. What an amazing bounce. This is set for continuation, guys. Look at this. Last pullback, low to the high. We bounced from the GP, which lined up with the 88. No reason not to enter this trade. That would have been the perfect trade for you. And straight buy up from there. Next ticker or next candle came back to revisit that trend line just to make sure. And we're bouncing up again. Tomorrow, want to see the continuation of bull volume. Honestly, it's looking a little bit weak to me. I don't know why. It's, on the breakout, the red flag here is... Okay, I do know why. The red flag here is that on the breakout, on the increasing bull volume, on the key trend line here, ideally you want to be seeing a follow through, especially a strong chart like this that's just continuing to make higher lows, higher highs. You want to be seeing a follow through on the key break such as this one. However, we got shut down, came back to revisit, and now look at this volume. Nothing interesting. It's kind of a red flag to me, especially considering it's a rising wedge. It could very well break downwards. Be careful if you're in the trade. Another trade that is going to be key going into Thursday, Friday. We will be seeing a break before the end of the week. Next, Zoom. Love the setup. Love what's going on here. As shared in our trading community, there is no bear volume. Very slight, if anything. And if we were to look at the 4 hours, this is a classic 4-hour bull flag setup. Decreasing bear volume. Look how low that bear volume is after this sort of pop. I love seeing this. This is going to be an amazing trade. Be patient. The next leg up is the payday. Looking at the daily inverse and head and shoulders. So this was just a 4-hour inverse head and shoulders that's playing out right now. And that's why we're seeing a bit of a stall. That daily inverse head and shoulders is the key play. We will be looking up above the 0.382 and ideally right around that GP and the previous resistance of 486. All right, that's it for hottest tickers. Let's speed through our ticker reviews. First one, NIO. Key breakout. We saw key support here, bounce from, held that 54.45. Lost by 8 pennies on last Monday. From there, it's been the hold. And then if we were to look at the closer time frame, the 4 hours is what I was looking at. We came down very slightly under this trend line, but we got bought up right away. That gave me confidence. Then from the hourly, we saw bull volume come in. Now we're forming an hourly bull flag. So from here, want to see a confirmation tomorrow. Might not be the first thing tomorrow, as ADMA is still a little bit of a ways away. Ideally, I want to see that touch and go. Chart is looking strong. Took my first entry today. Next, snow. Still looking strong. 4 hours bull flag. Look at this. So we had a break. Not ideal to see this upper wick from today, earlier today. Double upper wick. A little bit of a red flag, but we came to visit that 4-hour 8, and now we're starting to bounce. How does volume look end of day? We are seeing increasing volume. What I like to see. Again, as we know, this ticker likes to move on big movements upside and then slower movements downside. Look at these two look at these two candlesticks. That's what we're looking for. That kind of volume, that kind of price action. Okay. Next, DKNG. Not SKNG. Complete shutdown from all-time high, gapped up to new all-time highs. Then we got shut down. From there, volume still looking strong. Decreasing bear, increasing bull, followed by decreasing bear. That's less than an increasing bull, followed by end of day increasing bull. The volume on this ticker is looking amazing for a breakout into new all-time highs. Potentially we'll be looking at an entry tomorrow. However, risk to reward wise, not really there, as we are a little bit just ever so slightly extended from the daily 8. I'd rather see that bull flag set up on the daily and then a touch, or ideally a close on the daily 8 before the next leg up. Next, CLOV. CLOV. Okay. On the hourly, GP after GP. This is a strong bounce because we didn't even come to touch the GP from the low to the high. Instead, we touch a GP from the higher low to the higher high. almost touched it. Then from there, a little bit lack of bull volume. Let's see what 15-minute brings us. End of day, a little bit of bear volume came in. We did close over the 15.8. On the daily, still trading on the daily 8. Key resistance zone proving to continue to be a challenge. 1310. 1310, perfect rejection. 1307, rejection again. 1313, rejection. 1310 alongside daily 8 is the key to break. Next, open. Not particularly an interesting chart, but wanted to bring this up as it may be a very nice low risk entry rate now or in a couple days time. We are looking at a close just under the daily 8, and we're looking at a potential third touch on this lower trend line, this new lower trend line. This previous lower trend line has been lost by 1 wick and 2 bodies. So we'll be using this new lower trend line as more of a guideline. Now, if we were to look at it, a fib, does that line up? I will bet you it does. That will make a strong bounce. Considering if we're to come down for the next 2 days, we will be looking at a bounce from the 0.5 fib as well as the lower trend line. Most ideal entry right there around 26.38. Easy stop right underneath. Keep your eyes on this chart. However, personally, I am focused on NVIDIA already, so we'll not be looking at this chart, but it is an easy trade for you guys if you have missed NVIDIA. Next, HITI. Congrats, I trade for Chanel. Congrats, girl. Holy. I don't remember what day you went on or got in at. It's one of these 4 candles. Regardless, even if you, in the worst case scenario, you entered at the close of Friday, highest point, you would have seen 45%. By the close of today, you would have seen 27% return. Congrats, I trade for Chanel. One thing to keep in mind, we are seeing a bear divergence from here. Potential volume climax extended from the daily 8 on a slight, it's not really a shooting star, so we could see another. Okay, so if you're still in the trade, which I think you are, look for that continuation tomorrow, and tomorrow will likely be the day to sell. Something similar to back here, extended, but next day still kept going. On a small cap such as this, TA, technical analysis, does not work as well. So look for that continuation, but make sure you take some profits, if not all, at least take some profits on the continuation tomorrow. Very likely volume climax extended from daily 8 and likely to form a daily reversal candle. This is not really as hammery either. So just hard to trade small caps. The technical analysis does work, but not as nicely as it would on the bigger tickers. Regardless, congrats. Next, Airbnb. Congratulations to our new member, our newest member, Rafaela. And this is one of his first requests. I am so glad that you've been watching my video, and there is room for continuation on this ticker. So sad that I got stopped out, forgot to move my stop yesterday, but there is more upside to this ticker. So glad to have you. Thanks for coming on board, and congratulations on your win. We are seeing a slight rejection from the GP. No bear volume on Friday. On the hourly, nothing very noticeable except for the last hour. There is some, but if you look at this candle, there is some bear volume that came in, but if you look at this candle, you got to drill down a bit further to see where the actual volume is coming in from, and you will see the volume is actually bull. So from there, we'll be expecting a stall around this area, around this GP. We are forming a 15-minute bull flag. Very slight short-term divergences that could be easily negated. Overall, chart still looking great. Ultimately, would still be looking up at this upper trend line of the channel. From there, look for there's multiple trend lines on the down, on the way down. So even if we don't make it up to the upper trend line, there is plenty of supports for you for exits. Remember, always okay to take some profits along the way. The trade that we entered was 177. I don't remember what it was, but 177 something. And now we're up closing price 200. So that's about more than 10% gain. More than 10% gain. So it's okay to take some profits along the way. Next, APXT. Somehow I have two tickers, so let's see. APXT. It's a channel slash wedge. This is kind of interesting. So there's your wedge, and the channel will be, depending how you draw it. Oh, and obviously I drew it wrong. Channel will be something like that. Rejection, wick, gap down, bought up, support, support, support. So overall, in an uptrend, easy money to be made. We are near that low of the potential trend line, and we are seeing reversal candles. Volume not convincing, especially after this big bear volume shooting us down right from the upper trend line. But from here, we are seeing 1, 2, 3, 4 rejections ready. 1, 2, 3, almost 4 supports. I like my chances. If you're looking at this trade, risk to reward is worth it. Easy stop under 1435. Next, IDEX. What a nice momentum. Wow, it's going to be on the small cap, it's going to be a little bit harder to draw this channel. It is so bullish though. So bullish though. So we're going to be looking at something like that. Rejection, shot up, or broke out, shot right back down, came close, rejected, broke, gapped up above, shot down again. But overall, chart is extremely bullish. 475 would anticipate a retouch on this zone. Not extended from the daily 8 yet. Volume kind of choppy. Seeing this kind of volume on the bear divergence, if you're in the trade, most ideal what you want to see is a bull flag formation. So here's your bear divergence, and after this kind of price action from the bulls, what you want to be seeing is most ideal in the bull position is you want to be seeing something like that for bull flag. On the weekly, it would make complete sense. Look at this straight shot up. We want to be seeing a little bit of a stall. We are extended from the weekly 8. Seeing like there's a decrease in bull volume. Ideal to set up a weekly bull flag before the next leg up. Next, CYTH. Volume started coming in, so chart is starting to look interesting. Looking back at this whole chart, there is no volume comparing to the most recent volumes. And on December 14th, we started seeing, oh, this is weekly. Okay, so on the daily, it's a bear volume. Again, instead of triple bull volume, we are seeing double bear instead of triple bull. Nice continuation. Pop in bull volume. Big upper wick, forming a daily bull flag. No divergences, overbought, so it makes sense we're shooting down. No reason for selling. And momentum is increasing as well. So you can see previous trend line, now increased trend line, and now if we were to just form a bull flag, we will be looking at another increased momentum trend line. So chart is looking great. There is no reason for selling yet. Use that daily 8 as your guide. Might be a little bit hard because it is a smaller cap, but when we're seeing a run up like this, daily 8 becomes easier as a guide as opposed to back here where we close just under it. Next, neck. Big pop in bull volume, decreasing bear volume, now increasing bull volume. This is looking great for continuation. Small cap. And it looks like a great chart for day trading, aside from the drop in 2011. Since then, it's been having pop-ups, pop down, pop up, pop down, pop up, pop down. So it's a great chart for day trading if this is what you're into. Lots of bull volume came in on last Monday, and now we are seeing a continuation. Daily 8 remains your guide. We are forming, I want to say a bull flag, but this candle sort of throws it off. So without this candle, it would be an easy bull flag, which we're just about to confirm. Tomorrow, regardless, we want to see that increasing bull volume tomorrow on the first 5 to 15 minute candle for that confirmation. Next, we are looking at KIQ. Okay, video is getting a bit long. Let's speed through the last four. KIQ as space BA last week. Volume coming in. Nice. Continue the volume. Increasing momentum. Potentially a new trend line here now. Increasing momentum, no reason to sell. We just broke the key resistance of $1. Keep at it. Next resistance, 1.58 to 1.66. Then from there, we're going to have a lack of resistance. This chart is looking great for continuation. Next one, space. Daily 8 remains your guide. Trend line remains your guide. 1 hour, we have not broken down under the trend line yet. There's increased momentum. We can see bounce, 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 bounce. Now we're coming close to it, and we're potentially seeing another bounce. A little bit lack on bull volume. We are seeing no divergences, but gonna want to see that bull volume come in from how close we are to the trend line. We're gonna want to see that new all-time high close above. The highest close was 58.47. That will give confirmation for the bulls. Next, BA. BA, what a strong chart. Decent bear volume, unable to see continuation, and we just straight bull. Inside bar today, but straight bull, closed at near high of the day. Be careful on the BA because it does like to give a lot of fake outs. Look back at this triangle. Now we had to redraw this triangle multiple times because the first time we thought it was going like this, which it was. Break bear, or broke bear, no follow through, broke bull, no follow through. Then we had to draw a new wedge, and then it sort of came down, broke bear again, no follow through, broke bull again, no follow through. So be careful if you are trading this chart. It is extremely likely to give fake outs both ways. It's better to be late than early on this chart. When it does move, don't worry about not catching it. Even if you were to, sorry about that. That's my alarm for video recording. Even if you were to be late on this ticker, after you say you bought after the gap up, right at open, you will still be up 35%. So don't worry about the move on this ticker. It will provide nice return. Be late, don't be early. Still looking at this ideal entry of 199.08 to 199.74. All right, that's it for today's video. Thank you guys for watching. Hope you guys enjoy the content. If you are looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos. Also, make sure to check out our website at totalcontroltraders.com. There is still a few limited quantity left of our 7-day trials, and so far we have been having great success on our trial memberships, as the feedbacks that's provided, which will soon be shared on our website, and you guys can view it. It's been better than what I've expected. So thank you guys for all your support. I very much appreciate it. I hope you guys stay safe and be in control. Thank you for watching, and I will see you guys in the next video.